Let's talk about Tom Lee's GRNY Shot ETF, ticker symbol GRNY. Is it worth buying? Tom Lee launched an ETF at the end of 2024, despite some friends advising against it. While he could profit from issuing an ETF, but the move was risky, especially for someone like him whose main career is stock commentary on TV and the internet, and who also runs a advisory firm for institutional investors. By creating his own ETF, he exposes himself to the risk of damaging his reputation due to the public performance track record. Still, Tom Lee went ahead, showing his confidence in his stock picking abilities. The ETF's name comes from the GRNY Shot free throw made famous by Hall of Famer Rick Barry. He used an underhand technique seen on the right with his success rate of 90%, much higher than the standard overhand method. So how does this relate to investing? Like the underhand shot, some strategies may not look flashy but are more effective. The GRNY Shot ETF applies this idea to stock picking, favoring consistent results over appearance. GRNY Shot ETF works by focusing on 7 key themes: millennials, energy slash cybersecurity, global labor suppliers. This one includes AI because it makes the labor force more efficient. And we have easing financial conditions because Federal Reserve is on a cut cycle. We have PMI recovery, seasonality, style tilt. Okay, and the stocks must align with at least 2 of these themes to be included in the ETF. And Tom Lee believes that these are the 7 themes that will remain relevant for decades. While they may not all perform strongly at once, but leadership typically rotates among them, which means when one theme is cooling off, the other theme could be rising in popularity. The ETF selects the top stocks from each of the 7 themes, and if a stock ranks at the top ranking for at least 2 or more themes, it qualifies to be included in the GRNY Shot ETF. The top 2 stocks right now that applies to or have involvement in the most amount of themes are actually Meta and Google. Each of them are involved in 5 themes. The GRNY Shot ETF holds about 35 stocks, which Tom Lee considers the best picks from the S&P 500. While the remaining 465 stocks in the S&P 500 are still good, he believes they contribute less to the overall portfolio performance. So pretty much he's picking the best from the S&P 500 to be included. These 35 stocks span multiple sectors, not just technologies, and focuses purely on either pure growth or core, which means a balance between growth and value. There's no value stock in the ETF. The ETF is equal weighted, meaning that each stock holds the same weight in the ETF, and the ETF rebalances quarterly to maintain that equal distribution. The ETF currently has an expense ratio of 0.75% annually. It's the same as ARK ETF run by Cathie Wood. And on May 13th, 2025, just 6 months after the launch of the ETF, it reached $1 billion in asset under management. It is the fastest ETF to reach $1 billion in asset since launch in the past 20 years. Showing the popularity of Tom Lee's ETF. The GRNY Shot ETF has launched since November 7th, 2024. This chart shows you the comparison since that date. We have red showing the GRNY Shot ETF. We have blue showing NASDAQ 100. Green showing you the S&P 500. Okay, the GRNY Shot ETF is up 12.3%. NASDAQ 100 up 7.96%, S&P 500 up 4.8%, meaning that the ETF is beating the market. Now comes to the big question, is it worth investing in the ETF? Well, this is an active ETF, and an active ETF are generally considered riskier than passive index fund like S&P 500 and NASDAQ 100. Historically, around 80% of active ETFs underperform their passive counterparts over the long term. Additionally, active ETFs typically charge higher fees, which further eats into their returns. Tom Lee's GRNY Shot ETF holds around 35 stocks and is equal weight. It's a very interesting mechanism because it actually, even though it has less stocks than a lot of passive ETF, but it's actually, it may be in certain aspects more diversified or more spread out, right? Because if you look at the S&P 500 today, even though it has 500 companies, it's super concentrated at top. The top 5 stocks makes up over 30% of the index. Top 10 stocks makes up 40%. Top 50 stock makes up 60% of the ETF. So GRNY Shot ETF avoids that over concentration risk because even though there's 35 stocks, each one gets about 2.85% of the entire ETF. However, the equal weight ETF also have its drawbacks. Passive ETFs naturally reward winners over time as their weight increases because they're market cap weighted ETFs. So the better a stock does, the more weighting it gets. And the losers will gradually be phased out. Right? Their percentage shrinks, and then eventually they get removed from the index. The GRNY Shot ETF resets every quarter, so every 3 months it resets, meaning it doesn't ride the winners, doesn't let the winners run. Okay, so strong performers every 3 months will be trimmed. Well, even though this GRNY Shot ETF is riskier than the passive indexes, but its track record is short. But so far, the track record has been strong, right? It's beating the market. But to continue outperforming the broader market, Tom Lee needs to consistently make the right choice, right? Which means either add or remove the stock positions in the ETF every quarter. Because unlike the traditional ETF, this one is equal weight. So Tom Lee doesn't have to think about how much weighting to assign to his favorite stocks because every stock gets 2.85%. So all he needs to do is every quarter look at the list of stocks, decide to add more or remove some. Okay, so which simplifies the process for Tom Lee, but it still requires a strong decision making in order for the ETF to beat the market for the long run, and that makes it more risky or riskier than the major stock indices. And because of this higher risk, investors needs to be rewarded. In this case, beating the market, and it has been doing that. That's why I am optimistic for this ETF so far. But given the uncertainty, I see it more as a satellite position for your portfolio, not something to build a core portfolio around. But it's just my personal view. I'm not telling you to buy or not buy this ETF. Thank you very much.